Welcome to the December RCA discussion and webinar. Today, my name is Larry White. I'm the Executive Director of the Resource Consumption Accounting Institute, and today we're going to discuss truth in costing, specifically managerial costing. Hold on a minute, I got to admit a few people. Okay, again, I'm Larry White, and today we're going to be discussing truth in managerial costing. Now, this isn't about truth and lies, but rather what constitutes a fundamental truth or a principle. As many of you know, costing can be somewhat surreal as it is applied by accountants, and we're going to discuss that. You're all currently on mute, and after the discussion, I will open up the lines to allow everyone to make comments or ask questions. I'm also recording the presentation part. When we get to the discussion part, I will turn off the record, and if for some reason I forget, don't hesitate to remind me. I have a big note here to make sure that happens. All right, so first thing we need to talk about is types of costing. So first of all, there's the costing you do for financial statements, generally accepted accounting principles. These are done for an external audience fundamentally. They're done for investment decisions and choices. And by their own conceptual frameworks, they're known as general purpose financial statements, with the clear understanding that people like management or owners can get whatever information they need about the company, but people that are out in capital markets cannot. These have to be done in compliance with certain standards. What we're primarily focused on at the RCA Institute is costing for internal management decisions. And these must reflect cause and effect relationships within the organization. And they require compliance with, well, that's a big question. That is the big issue. That's the reason I talk about this frequently. And it's a source of confusion in organizations, even for accountants. So, what is accounting? Is accounting about the laws of nature? Is accounting meant to reflect reality? Or is accounting about the laws of man? Is it meant to reflect the rules generated by a social consensus? Or is it both? And how much of one and how much of the other? Well, clearly, financial statement presentation is a law of man. It's decided in the United States by 5 people up in Connecticut. They sit around the table, they go through a process, they have staff, and they write the rules. They produce the financial statement rules, the FASB, generally accepted accounting principles. Is it truth? In one sense, I suppose it is, because it is the truth in compliance with certain rules. Is it a consensus-based standard? It certainly is. They publish a conceptual framework that says what they want to achieve, but on any given standard, they have to make compromises, and they do. So when it comes to financial statement presentation, you have to be truthful in the presentation, but does the presentation represent a full and absolute truth? Well, they're designed for a specific audience. As I said, investors and creditors. And for auditors that are seeking to provide assurance on the information in them to capital markets. So what truth? I've kind of impugned financial statements, and let me be clear, there's nothing wrong with them. I'm not actually impugning them. I'm just trying to be clear about what they do. So I've kind of attacked them. So what truth does managerial costing seek to represent? Well, the resources and operations that exist in the organization that is modeled. That's what they need to represent. They need to be a monetary reflection of those operations and the resources they engage. And resources and processes are fundamentally what managers make decisions about to create value. Most managers in the company don't really make decisions about money. The decisions they make result in monetary outcomes, but they make decisions about resources and processes. And so when they're looking at the money, which they often do, shouldn't decisions be made from a reality to another reality? Shouldn't the money reality they use to make decisions be the same as the reality of the resources and processes they looked at? Shouldn't there be actual cause and effect relationships displayed there? Now, how many of you have been asked for one of these, a true cost or a relevant cost? And when you're asked for that, what are they really asking for? Well, I mean, that's pretty obvious. They're asking for something other than what you provided them, which was probably what came out of your financial reporting system, financial accounting system. So let's talk just for a minute about relevant cost. It normally means relevant to the question at hand. A deviation from the costs you've calculated. And oftentimes when you go to reassess and create that number, you start with a number based on the generally accepted accounting principle convention, and you try to make it decision relevant by adding and subtracting certain things. Not a particularly efficient way to do business. If you think about it, the resources don't change unless you take actual action. But financial statement costs can change due to many irrelevant factors. Production volume changes, increases or decreases in inventory, depreciation conventions, allocation factors, and many other things. What about true cost? True cost, again, is almost always something other than what the financial accounting system is reported. Before I got into this, I used to have a motto when I was very young in the costing world. I used to tell people, I'll make it cost whatever you want. Just give me choice of adjectives. Now, is that truth? Or is it a lie? Or am I covered by my description of the number I came up with? I don't know. I think it's a very bad situation, but it makes me laugh when I think about it today. So what is truth? How can it be defined for managerial costing for internal decision support when there really aren't any rules? Well, if you look up truth in Wikipedia, you're going to find a number of theories of truth. I think last time I checked, I made this slide, there were 5 major theories of truth. Only one of them is reality and science oriented. The other 4 that are down below in the gray box are more human and social oriented. So what I want to contend is that managerial costing is in fact a reality-based, science-based activity. And so therefore, there's really only one theory of truth that should be applied when you do managerial costing, and that's called the correspondence theory of truth. It very simply means truth corresponds to facts. Financial statements fit somewhere among these four. You can look it up and you can decide for yourself which one they best fit under, and it may be multiple ones. So let's talk about the correspondence theory of truth for a little bit. It originated with Aristotle with a very wordy statement that I like to boil down into the simpler statement. A truth or opinion is true if what it corresponds to is a fact. And for me, and for managerial costing, facts are the resources and processes you are managing and that you are modeling. There's a few interesting quotes about truth that we found in accounting literature. I'm gonna read these for just a minute. It is very important that the cost should not be regarded as something that may be manipulated, nor should they be thought of as representing anything but the cold truth, however unwelcome that may be. And that, of course, comes from Alexander Church back in 1910, before the creation of financial statements and the Financial Accounting Standards Board, I might add. A later one was the cost accountant was concerned not merely with the presentation of facts, but his objective was, insofar as possible, a presentation of the truth of the facts. Now, this is an interesting statement, and it was uttered by the leader of a committee on cost accounting concepts and standards back in 1954. And I might add, that committee did not conclude its work, and the American Accounting Association, a group of academics, has really never sought to do this again. So some interesting things, but the issue with truth and costing has been recognized for quite some time. There are some truth issues for management accounting if you think about it. If there is no standard or fundamental truth, on what basis are new theories challenged? If there is no truth, there is also no lie and no error. And my opinion is the lack of truth in managerial costing stifles real progress. Critical thinking, a key ingredient to progress, is diminished. How can we prove that any one approach or method is better than any other? Well, if you've followed managerial costing for some years, it often boils down to who has the biggest advertising budget and the most salesmen, because management accounting has been full of what they call TLAs, three-letter acronyms, all of which are claiming to be the panacea and all of which have ardent advocates. The impact of that is that there's a lack of a common frame of reference, which makes it difficult for the profession to communicate effectively to our customers, which is really everybody else in the organization. We can communicate effectively about financial statements because there are a set of rules. But when we step away from that and look at the things like quote unquote true cost, relevant cost, we're out in the wild, wild west. The other problem we run into is we're not able to make a convincing case for or demonstrate how improved costing adds value to the enterprise. Everyone just says, well, you're meeting your regulatory requirements. End of story. We only need one version of the truth. But I think we need more than one version of the truth. So the Institute of Management Accountants addressed this problem some years ago, and developed a conceptual framework for managerial costing, which is available as a statement of management accounting. Whether you're a member of IMA or not, you can get to it. There are several other derivative SMAs talking about managerial costing and applying the principles and concepts of the conceptual framework for managerial costing. And there was a task force report on the conceptual framework for managerial costing. This was quite long. It was 120 pages. The actual framework itself is more like 30 pages. However, the task force report is no longer available. So if that's something that interests you, you might have to email me directly in order to get a copy of it. Where does RCA fit in this? Well, from my point of view, and you can tell I'm a little bit biased because I'm with the RCA Institute. RCA is the only managerial costing approach in the marketplace today that is principle-based and not method-centric. We use whatever methods we need as long as we feel they're an accurate reflection of reality. We seek to apply the principles and concepts for managerial costing consistently, but of course, appropriate to an organization's needs. In other words, if they don't need a particular concept or principle to help them make their decisions, we're not going to spend their money trying to create that information. And RCA is fully compliant in that it can do all of the principles and concepts of the conceptual framework for managerial costing. So what is RCA? And I always show this slide in a presentation. It is an approach to doing costing that's focused completely on internal decision support. It focuses on linking operational metrics and resources to finance and reflecting clear cause and effect relationship. It's a combination of German management accounting methods known as Grenzplan, Kostenrechnen, or GPK, that have been around since the late 1940s. In fact, SAP was kind of founded to do that, though you'll have trouble finding anyone, at least in the United States, that knows how to apply it in their costing module. And we incorporate, when necessary and when valuable, activity-based costing, and it is often valuable. So that's kind of my whirlwind presentation about what constitutes truth in managerial costing. I always enjoy giving this presentation, and I am happy to discuss it, whether you have questions or comments. So let me take a minute and I will start.